All right, everyone, welcome to the PivotBoss Premium Trading Room. And for today's January 9th, 2017, it's our first market outlook of the new year. And the goal today is to basically go through several of the futures charts here, kind of get an early idea of what types of setups are starting to emerge a little bit as we move forward into the end of January and throughout the Q1. These first 3 months are some of my favorite months to trade, and so I usually try to host several market outlook webinars here early in the year because we get a lot of great activity, and we're typically really accurate with some of the calls that come our way. So what I wanted to do in this webinar was kind of go through and follow some of the futures markets. Crude oil had a big day today, down. NQ is sitting near highs up there and could see a fade here soon. So that's going to be something we'll be looking at. Additionally, I also have some stocks here that we're going to be covering because I was able to run some stock scans and find a few opportunities here that may be decent as we head into the next couple of weeks. And first, I have a brief announcement here. You probably already saw the announcement this morning or earlier this afternoon, but the Denver Trading Group webinar will be this Friday. And I love the Denver Trading Group. It's a fantastic group. It's been around for quite a long time. They recently switched to a webinar format, but they were one of the last trading groups that really just had a monthly following, with live audiences for so many years. A great group, great traders. Ron Rossway is the president of the group, does a great job, and they asked me to speak this Friday. So the topic that I chose here to present to everyone is going to be the absorption signature, and it's a PivotBoss signature setup. It's one of my favorites. It is my favorite setup. It's the one that's the most powerful setup that I've been trading here on every time frame over the last several years, and that's one of my favorite setups out there. And we cover a whole lot of setups in the trading room. So this is one that I think everyone's going to like, and this is going to roll us into next week because next week, in our premium trading room, if you do the trial offer, which is $19.95, you'll get 4 more. We're going to do a signature setup series, 5 signature setups next week in the trading room. It's going to be a lot of fun, so you can be a part of that as well. So this is going to be a really cool Friday to be a part of. I think you're going to love the content. Let's go ahead and jump into the chart here. What I wanted to start off with first was crude oil. Here's crude oil. And this is the NQ. Let's go to crude. I could start here, I guess. But here's crude oil. Crude oil had a big day down today. And you can see right here, this is my PivotBoss quote board. The PivotBoss quote board here shows ADR values. And this is average daily range. And then this is the current range for the day. And then this is the ADR range percentage. So the percentage of the current range. So today's range in crude was over $2 a range. It's only been averaging $1.22 over the last 10 sessions. So today was a big day, 163% of ADR. That's typically indicative of potential expansion to come. It's a big day here. We had a day similar to that to begin the new year here where prices were rejected above the previous week's high at the time, which is actually the previous month's high, or rather the previous week's high, just shy of the previous month's high, right over here. And what's important about that is that when price went into this upper band up here and pushed through the previous high, it was a significant rejection, and then every single key level along the way was offered all the way down until price reached the lower 25% of this impulse key range. So what we talked about in the trading room was the fact that this held so cleanly for a couple of days. We knew there was likely a neutral key range developing. So you have an impulse range, high to low, 51.02 up to 55.58. The midpoint of this range is 53.30. And you can see that price mainly stayed in the middle portion, the middle 50% of that range. And so this one right here is going to be very, very important because anytime you build out within the middle 50% of a key range like this, it's indicative of significant energy building right in that zone. So this thing is coiling up significantly. It's got a lot of juice that's building up in here, and I think we could be looking at some sort of significant breakout soon. Let's see here. There's a question. Are training videos in premium safe for letter viewing so I can see past ones? Absolutely. I can give you a little test drive of premium later on. Our premium has an on-demand video archive, and in the on-demand video section you have countless videos from our premium trading room, replay videos, and you also have the 10-part executive training series, which trains on our PivotBoss methodology, which includes a lot of the content we're talking about now, but teaches it in a format that's really quickly digestible, 45, 30-minute clips. That's awesome. Well, thank you for purchasing the book. I appreciate it. Thank you for the kudos there. And you can also take the trial whenever you want. So that's yours to activate at any point. And next week, we're going to, it'd be a good time to do the trial, because next week we're going to be doing that signature setup series, which will be pretty cool. Thank you, thank you. You know what? I have not posted my IRT definitions to ChartHub, but they are on our premium membership site. And these actually, I'm going to get with Bill Lynn of the LynnSoft and actually do an install. So it's going to be a custom install, so that if you are part of the trading room and you want my setup, you can install, do a quick install, and you get all of my indicators, all the proprietary tools, everything's right there. So it's something that we're working on in the room as well. So right here, this is something important right now, because today we saw price go offered. We had 3 days of higher highs and higher lows, and then right here, price takes the previous session's close offered and never looks back. I mean, it just continued downward throughout the session. I started the pre-market report saying that you don't want to buy into that because the weakness was very bad. The S3 VWAP band was trending quite a bit lower, and we never really quite found the lift. And so the idea was just to sell rotations if you wanted to engage it at all. This dropped a lot farther and faster than I thought it would, but 51.67 is a very important key pivot. 51.67, and price basically got very, very close to that zone today. I mentioned pre-market. 51.67 is the top of another key range here, I believe, or it's an expansion target of a key range, and that's a level that the bulls really want to keep bid, between 51.67 and 52. So we're at an inflection point in this chart right now. We got a lot of pent-up energy that's building out. We're sitting, right in the middle of a balanced range that's developed up here. I think expansion is coming soon. Now, one thing I did mention before is that this thing right here, with the way it's going up, if it can continue to hold above 52s, right, 51.67 to 52, the expectation was for more strength. But the moment that this thing fails to hold that 51.67 or 52s and can't establish back above that zone, all of these late market participants that got in too expensive are going to be forced to liquidate, and that's when you'll likely see a quick move back to value. That's 49.28 with a shot to rotate to the opposite side of value, and that's 45.68. So this is very important in here to see who's going to win out, which way are we going to go. The inflection point right here, 52 to 51.67. It's a very important zone. We have a neutral key range in here and very, very nice boundaries. I think we're going to see some significant expansion here. One thing, because we have had a very nice up move here, I'd be looking for any traps down here that could squeeze again for a retest of the highs. That's my primary idea, but if we, again, if we can't fail to hold 51.67, it's a quick move to value. So this is something to look out for in crude oil, because this one's going to be, it had a huge day today. Typically speaking, if there's any rejection on these lows, you could start to see a fade right back to the initial point where it sold off. So something to watch out for down here tomorrow or in overnight trading is a rejection of those 51.67s. I wanted to take a look at the NQ. Yeah, I'll take a look at the YM chart. I'll jump over to the YM here in a bit. Here's the NQ really quickly. One thing about the NQ, it's starting to show signs that it might be overextended to one side or the other, and that's going to be something that we really need to watch out for, because here it is. Let's bring up the monthly. here is the key levels, right? We have this high right here, and that's the 49.94 half high, and then price rotated hard down into 48.50 and then bounced hard into the midpoint of the range, 49.22 half. Went bid through the range with a midpoint at the midpoint of the range, and then here was bid up and defended from above, and then you had a pattern uptrend up, very clear market structure to the upside. But here's the deal. Prices have been, after this move up here, prices have coiled back and forth, developing what I talked about before as being a potential expanding range. And anytime you have that, you're watching prior highs, because if there's any failure to establish or maintain acceptance of these highs, that's when late bulls will likely be forced to cover when they're not paid. And so one thing that we are watching for here in the NQ is the previous month's high of 94.50. Because if there's any action up here and price fails to hold that level, any retest of that zone or any failure to get back above that 5,000 zone could be a lower high opportunity that just cleans this range all the way across this move. I mean, it could be a 200-point move is what I told our traders in the room, and it could be quick. So that's something to watch out for. Now, that's the idea, right? 5,000, 49.94. We're up here right now trading outside of it. If prices were to go offered through that zone, it could be a continuation from 5,000 into new lows. Here's new lows. Anything below 48.50 would be in the zone. So it could be as much as 200 points, as little as 150, but it could be a significant move. So that's one to play there. And these are ideas here that I always talk to our traders in the room about. These ideas, they happen in all time frames. You can trade them in a multitude of ways. A lot of times here over the last year, I've been trading swing ideas in this manner. But the entries typically are done on an intraday periodicity unless there's some sort of midpoint retest. That's one of my classic entries, is a midpoint retest. So that's a midpoint, and you're in an uptrend here. When price comes back to the midpoint, it's defended, and you continue, right? And so for you who just read the book, that's the midpoint is the bottom of the pivot range. So when you're in an uptrending market like this, the bottom of the pivot range is the midpoint of the previous day, and then the pivot point's here, and then the top of the pivot's there. So when price drops into it, that's your buy, and then you clean on the new high. So there it is, right? It's the same concepts that we've been talking about for a long time, but being patient about those rotations is something that everyone has to do. The market's not always working as it should over the last year. I mean, the last 6 months were painful holding periods, and then we got some volatility here recently, but you have to pick your spots in the recent market. Last year, the first 6 months were fantastic. This year, I think it's going to bring about a lot of volatility here, especially once Inauguration Day comes. I think you're going to switch market personalities from the prior market personality, which was Fed-based, uptrending market, to something different. And so we'll see what that personality becomes. But right now, 49.94 is my zone. Anything up here failing to hold that zone, I think would rotate this. And while I say this could come out to a new low, that's not the primary target. The primary target is always coming back to value. This is the micro composite value. So the high odds trade is for a failure to hold 49.94 and bring it back to 49.41. And then right there you can get to a T1 target or some target, and then the rest can be just a hold to see if it continues onward. And then there could be re-entry opportunities and the like. So we'll keep an eye on that. Now, one thing to keep in mind is we're in an uptrending market. This market here could continue to go higher. We've seen every pullback be a buying opportunity. But to start the year with a big push up, I would say that typically speaking, most pros are looking for a fade in the opposite way. And even if it does fade, it still will become an even better buying opportunity perhaps going forward. This market is still bullish, buoyant, and you have to respect the trend right now and not try to counter trend trade too often unless things line up nicely. But this one could be lining up soon. So that's a little bit about the NQ there. We had the ES as well. The ES is one that continues to test the previous month's high. So for those of you that are not familiar with some of my work, I've done a lot of research with pivots over the last 15 years. We've done a lot of algo-based mechanical and fully autonomous systems. We've done all kinds of different things, from building these things from the lower time frames all the way up, and stitching a bunch of these strategies together, creating great equity curves and automated funds that we've built. So I've done a lot of data analysis with regards to pivots. And one thing that I always came away from with this was I was astounded how important the previous high, low, and close was, right? So a previous high, low, close of the previous day, of the previous week, of the previous month, of the previous year, of the previous hour is very, very important. And when I tested it out against other forms of pivots, it always tested out more favorable. And so that's really where I finally said, you know what, I'm going to create what I call PivotBoss pivots based off of the previous high and the previous low and the previous close. And you can see here, this is the pivot range, which was taught to us by Mark Fisher there in his book Logical Trader. And each of these levels are derived from these three levels, the high, the low, and the close. And then here, this is just 25% expansion of the previous range. That's 50% expansion, 75, and 100 is about probably right here. So it's very, very simple. The reason I do this is because that's the way the algos approach it. That's the way pro traders approach it. And you have to do what works. In previous range, this is an auction. This is how it works. And right now, we're starting to see 73s here be rejected, at least early on. And that's something that traders are always looking for. It's how does the market respond above a previous high. And you can see right here, very similar to the ES, we've kind of been going back and forth a little bit. If there's rejections up here and an inability to hold above 73s, that could lead to a move across the range below this low and put you perhaps back into the midpoint of the previous month's range into 22, 23.5. So right now, there could be a fade opportunity brewing in the ES. We'll have to see how the overnight plays and how price responds to 73s, if at all. But I mentioned today, pre-market, that if there's any failure to hold 73s, overall, we could be looking at a move back down. So 22, 23.5 could be about the level where we see a move to, and as low as 22.14. So one thing I told our traders in the room, and I've been talking about this for at least several weeks, because when price rallied right here in December through the November high, that day where it rallied through it, it left behind ill-auctioned prices. And what I mentioned to our room is, you don't just leave behind ill-auctioned prices like that and not come back to it at some point to re-auction those prices in a better way. And so when price blew through that zone and came up here and started to gyrate back and forth, we knew it was trying to establish a value, and at this point, that's when your D-shaped profile starts to emerge, leaving behind an LVN closer to where the breakout occurred. And so if you're going to go back and forth like this, at some point, you're going to come back and fill in that zone. That's how a market develops a balanced D-shaped profile. It's time and volume, and it's trading those prices over and over. And so right now, we're watching for signs of a rejection, perhaps back toward 23.5, and as low as 14s. And I do believe that once price gets down here, wherever it may get to, should it get there, it would still be a great buying opportunity back up, perhaps into 22.80, 22.85. So right now, all is well and good. We're watching to see how it performs here. I think it's safest to buy pullbacks right now than sell highs. But I do think that there is an opportunity here to fade at some point. So we're going to watch here to see how it plays out. Any failure to get back above 73s could be the trigger to get this thing right back toward 36 and then 23.5. So that's a little look there. Now, one thing about the ES that I mentioned was if this continues to push higher, if somehow we push through 73s, then the next two levels up are going to be the 25% expansion on a monthly basis at 22.98 or 97.75, and then you have 23.22. Now, based off the monthly low, that's the monthly low. If it remains the low of the month, the average monthly target would put you here at 23.42, and this right here would be your 75% ADR target. And so that's our primary target, high odds target right there. So if this were to continue higher, we'd be targeting somewhere 22.98 and just above it. But we got to see how price plays here. That's the auction. That's the pivot to watch 73s. Our trades called out in the room. Yeah, so what I like to do basically is provide a pre-market report in the morning in which everyone gets, and then from there drill down into those ideas and watch the markets for ideas. So lately, with the market being so quiet, I haven't been doing a whole lot of calling out. We've been watching certain areas, and there's been some great moves. And our traders in the room are typically the traders that do best in our room are the ones who have experience, that have been around the markets a little while. So when I say, hey, I believe that we're about to see a rotation back up, they generally know how to engage that opportunity and make money with it. And I try to do my best with exactly what we're looking for and when and where. And when the market has great pace and tempo, we are certainly calling out these trades and watching them go in our favor with little to no adverse excursion. And that's always the goal. Anytime I'm calling out a potential zone where I think that the market may move, I'd like as little pain as possible in the trade. So what we're looking for is typically a quick move in our direction, take half the trade off the table there and book and bank that so that you get to break even. And then from there, allow the second half of the trade to work in your favor. You get to trade from a position of strength, no emotional attachment once you get to that T1 target. And I found that that's a much more stress-free approach to trading than the alternative. So we talk all about that live in the room every single day. We've also got content and educational training in our trading room dashboard where you can review that as well. Let's see here. So here's the QQQ as well. Let's see. You can see even here, nice little expanding range that's been developing. One thing I really like are impulse moves. It's where the market drives in one direction until it can't go lower anymore, for example. Then it snaps back hard into the opposite direction until it can't go any higher. And then it comes back to the midpoint. That type of impulse move is so important at times. So this is going to be really nice here to help define the rest of the month in tech. Here's the YM. Now the YM has been incredible. And I know there's some traders in our room who love the YM. Oftentimes, some of these moves are so precise. They're so great off of our levels. And, so a lot of traders really like this one in our room. This is really nice right here. You got this thing right here where you have a big push up, and now it's sitting here near highs. And this is very similar to what I mentioned with the ES just a moment ago. You get left behind a significant LVN here. It'll auction prices on a day where price goes from one market state to another up here and attempts to create some sort of value up here. In order to do that, you got to gyrate back and forth. And so I think right here you're still going to see some of this. And coming into this level though, this is kind of the do or die point. 19.4. 369. If price were to come into this zone, that could be a fantastic buy on the way back up. So that could be something to watch out for. If you fail to hold this level, say you come up and then boom, a lower high hits, that could be a huge push right back down to 18.6, because this is the ill auction zone. Again, the market is an auction. That's why I look at the volume profile, because it reveals the auction at each of these prices. We watch price, we watch volume, and we look for value in the charts. It's very simple, our approach. And that's why our approach is, traders are able to replicate the analysis on their own, because I stay very consistent in how we approach it. And one of the things is the developing volume profile. You see it right here. Big volume ledge right here. Prices after they pushed up here. This is after the election, right? This is the election night key range right here. That's the election night right there, election day, and the key range takes you from here to here. And you can see price went to 50% expansion of that election day impulse move. then went right to 100% and blasted through there. So this has been impressive how it's moved, but in doing so, it left behind an ill-auctioned zone. So you're likely going to see price come all the way back against this point at some point over the next few months. But at the very least right now, any push into 19.4 could be a short-term push back up. And if there's any failure to hold there, you re-auction at 18.6. Yeah, that's the thing about trading is, you know, there's so many different experience levels. So many different experience levels in the room. You know, I try to break it down easily so everybody can kind of get a hold of it. And then, you know, some just kind of run with the information much quicker because they've done it a little while. Others still need to kind of see how it's done a little bit, but again, in our room, I think we do a pretty good job about knowing which triggers we're looking for, knowing how to find some of the setups, and when to be patient, because a lot of the market here, especially lately in the last few weeks, and a lot of the second half of the year was about being patient. So right now, the YM's holding at highs, very narrow range. One thing I always tell our traders is when the range is this narrow, a market is likely to test both sides of the range at some point. So when the range is this narrow over 1, 2, 3, 4 weeks, you're likely going to come up here, wipe up some stops. You're likely going to come down here, take out some stops, and before you find direction. And that's why I mentioned before, I think you're going to see some of this. And then it could be a great buy or a big failure. There's still some development. And we got 11 days until the inauguration. The market could just kind of float up until then and see what happens once he's inaugurated. So we'll see. So those are a few of the markets there. We have gold also. Let me take a look at gold here because gold has been very interesting. There's a lot of traders in our room that love gold as well. Gold was fantastic for us last year. We had a lot of great spots here where we really called out some great moves. And then right about here is when things fell off. And that's when the FOMC key levels started to go offered. Lower highs. Bulls had been defending, but they were getting paid less and less on each of these rotations. And that's always a cue for us that the stops may come out. And they certainly did. Price dropped. When price dropped back below the 1305s, our expectation was that we were likely headed to 1200. To 1180 to 1200, and that any pullback into 1306 could be a selling opportunity. So it happened almost exactly as we thought it would, but the election night impulse range right there kind of threw a wrench in everything with that huge tail all the way back up. So it came all the way back up and then took off again down. So right now, only just recently have we come all the way back to retest 1180 from below. 1200 is still yet to be tested, and that's a thick band of resistance right now. So gold has been in a short-term up move. We've been talking about, I mentioned before that we were likely to hit 1180, and we got it, and now we've sat up here for 3 days. And I think the pivot right now to watch is 1170. Holding or rejecting off of that zone would suggest a continuation toward 9790 to 1200, which is this next zone up. So right now, that's the pivot to watch, 1170. But this gold chart has had a short-term up move, but it hasn't really reclaimed any bullish position from a longer-term perspective. So just keep that in mind. It still needs to prove itself if it's going to go higher. If it does prove itself, say for example, it comes back and pulls back to about this point here, and then you see a huge defense. Now these have been big time rejected here. That type of action would lead me to believe that we're headed probably back toward 1263.20, and that's micro composite VPOC there. So that's what we're looking for. If we had to look out a little bit into the future here, we're probably some sort of little rotation here, and then that could be bought. But again, any failure to hold above 1150 would be significant. So they got to hold that. 1146 half was the level we were calling out. 1145, 1146. That's a big time zone that bulls must keep bid. All right, I had a few stock candidates I wanted to go through with you all. The first one here that I saw was INSY. INSY here, Incest Therapeutics. One thing I found interesting about this one is that we have a great impulse range here. Impulse range where price drops down, can't go any lower, rallies big time, finds a high, and then comes right back to the midpoint. Now you have a key range with highs, lows, and a midpoint, and you have extensions outside of it and also key measurements inside of it. One thing I always look for when you have this key impulse range that forms, when price gets outside of it, what happens? You know, because when price broke down outside of this range, below that low on this day, it came down here, formed a low, and then just sat here, sat here, sat here, and sat here. So lots of bears were coming in here, right? For every buyer, there's a seller. So there was lots of bears that probably got short too late down here. They did not get paid. They all have their stops right at the same level, right, above these highs. And then price gets the first squeeze, right? So any late bears down here didn't get paid. They were forced to cover. When price pulls back to this point right here, that right there is our optimum entry for many of our traders. That's what we're looking for oftentimes. If price is holding below this low and pops back above it, when it pulls back, that's about the zone where you're typically looking to defend for a squeeze. So we got a rejection day here today, a midpoint right at the key level, about 10:01. The idea would be to look for bulls to defend a retest around 10s or thereabout for a shot at squeezing into the previous month's high, which is just shy of 12s, like 1198s. And then for a further continuation after a pullback, perhaps into 1369. So right now, the high opportunity trade, high probability trade is for defending 1001s and taking it to 12. And then perhaps the next pullback can get you squeezed into 1369. So that right now is an opportunity to watch out for. We also have eBay here, which was interesting. I hadn't looked at eBay in a while, and I thought, you know what, this... Well, eBay is interesting because it's doing something that I look for often in a chart. So this one had some uptrending moves here, kind of got, you could see ascending, and then we had a big stop run day right there. That was the previous session, Friday. And then when that happens, you can see where the midpoint of the day is. It's usually right about where the stops came out. And on the next day, like today, any pullback to that area is usually defended for a shot at seeing a continuation higher. And so this is what's happened today. They basically came in defended. Now, this doesn't guarantee that that's going to happen. It's just you know now who's positioned where. Bulls are positioned right here off of 3060. They have sell stops below it. And so tomorrow is going to be very important. If price comes into this zone, is there a rejection? Because if so, look for this thing to continue higher and perhaps go and fill the gap at about 3250. So that could be a move from 3050 up to about 3250. If there's any failure, because I love this type of setup because you can see here the resistance. So right now prices are holding just outside their resistance. If tomorrow, if price can't hold that and drops back below it, this right here, that false breakout could lead to a huge rejection. So this is a very important pivot in the charts right now. Because of the squeeze, because of the nature of what's going on, I favor an upside move back toward 3250. Failure to hold 30 half here would suggest a rotation back toward the previous close. MTG is another one that I was taking a look at. This one has been in a significant uptrending market, very, very bullish. And right now, it's retesting kind of an LVN after it pushed through the LVN. And so typically speaking, in an uptrending market, in a markup phase, responsive bulls look to defend the LVNs. So if it pushes through the LVN and continues higher, when it comes back, bulls are right here looking to defend and bring it up another notch. So right now, this 990 level, very important. We got a bit of a rejection, not perfect, but you're trying to get back above the previous month's close here. So again, bulls are trying to keep 10s bid, and if you start to see absorption off this end, I think this has a great shot to squeeze to a new high right up here. And you'll probably see this thing continue on a little bit. So this one has a shot here to be a quick 3 to 5 day move to new highs. We'll see how that one plays out. We also have, those are 3 long candidates, and I have about 6 sell candidates here. I'll run through these as well. FDC is one of them. I love trading range type of markets here, where a market will rally until it finds that rejection high and it comes back and finds a floor. And then when it comes back to test that high, it's either got to push through and continue, or it's going to reject and return back to the bottom. And so right now, this is what I call a rejection day. You can see again, you see the stops were up at that high. That's where the midpoint is. And then you close way back below. So the idea here for this candidate would be to look at basically 1560 or thereabouts, even maybe 1550. And it should price rally into that zone, open below it and rally into that zone sometime tomorrow. Defending somewhere in here, 1560 or so, could be an awesome opportunity to bring it right back toward 14s. So that's something to keep in mind, is anytime you have an edge, you have a trading range market, and you go toward an edge and see a significant rejection day, you're likely going to see over the next day or two an absorption signature develop, and perhaps on the third day you could be looking at a big push. So we'll be looking at how this one continues on as well. We have GLPI as another sell candidate. Again, this is very similar. We have a trading range down at the lows, and right now we're showing rejections off the upper edge of the range, failing to see acceptance beyond recent highs. That would suggest a drop back toward lows. So right now, a rejection of prices above the previous month's high here have occurred. So any rotation, back into 31.25, 31.30 could offer a selling opportunity for a move back to the opposite end of the range around 29.50. So that could be a pretty decent move of about 2 handles on the way down. We also have IPHI. This one I found interesting because we have a rejection day right now. You can kind of see, just generally speaking, these recent highs have been rejected, and we've kind of pushed downward, and then we had a rejection day. Typically speaking, that can give you enough juice to find and search that other end of the range into the LVN. So one thing I want to see with this one is, are prices above the previous close rejected? Because right now they're being absorbed here, but you haven't seen price really drop just yet. So that tells you that there are buy stops above this zone, so you have to be careful a little bit here and cautious. But if price can remain below this midpoint here, 45.15, you could see this thing start to work its way down toward the bottom of the range. We also have BX. BX here. Now this one's interesting because it's holding above a prior high. So that's the previous month's high. And then you can see there's been 3 days of trading above this high, and yet higher highs have been rejected. So here's a high, and then it gets up there and rejects and closes back below it, right? And then here's a high, and then it gets above there and rejects and closes back below the previous close. So right now, it's showing that it's holding above the high, but those bulls that are sticking their neck out to buy at these prices aren't getting paid. And if they don't get paid, someone's going to jump ship, and there's going to be some bulls left holding the bag. That can rotate you right back down toward value, toward the previous close. So right now, just watching for signs of a rejection. If there's any failure to hold this level, there could be a retest opportunity that brings you back toward 27s. We also have 3 more candidates here to look at, and then we'll wrap it up. Basically, this one right here, very similar to our last candidate, but you can see up here, very clear resistance at 46 over time here. And then right recently, you can see here's the previous month's high. Price formed 1 trading day above it and is currently rejecting. So anytime I see something like this happen, I'm usually watching very closely where the stops came out. So that low right there, again, here's the midpoint of that day, very close to where the stops came out. So tomorrow, your goal is to watch to see what happens here when price gets to 44.25. A rotation into that area could offer a day trade opportunity for a new low, and that day trade could turn into a continuation back toward the previous close at 41.46. Let's take a look at VIAB. This is Viacom. This one is back into its familiar territory of resistance. So you can see here 39s. This one right here has been rejected every single time it's been in this area. So time and time again. And right now we're back at it again. We formed another rejection day, but not huge, but we formed another rejection day. I would continue to watch to see how price responds up here. I'm not sure that we're done just yet, but I think we're a day or two or three away from rejecting this zone and perhaps returning right back toward the previous month's close at 35. And lastly, we got YHOO, and this one has been incredible off of our key range. Again, you can see the magic of these key ranges. Impulse move low, impulse move high, and here's the midpoint. When price failed to hold below the bottom of the range, it turned that area into resistance. It eventually dropped right to this low. That's your 100% expansion target. So that's 100% of this range downward. And it reached it, formed, someone got in there with limit orders and clear absorption in that area. Nice little accumulation phase, a big breakup, and rallied right back to resistance. So right now we're right back to where the market has been offering YHOO. So it's 41.70. You can see time and time again. What I like to look at is how far does price move each time it rotates off this zone. So you can see the last time it went all the way to 38.5. The time before that, 39.5. The time before that, it got down to about 38.75. And then the time before that was about 39.75. So at the very least, a rotation can bring you back toward 39.5 with a shot at seeing a new lows in 38. So this could be a great opportunity to watch. This thing is done as soon as price closes above 41.75, right? That would be something different to watch out for. You really don't want price getting much above the current midpoint there. So those are a few stock candidates to look out for as we head into the rest of the week. Typically speaking, with these candidates, you want to see a quick 1, 2, 3 day move in your favor, right? Up to 3 to 5 days. And then what you'll notice is over the course of the next week or 2 or 3, you usually see a continuation as well. So these can be fantastic candidates for shorter term swings and also even a little bit longer out there. Again, I wanted to say thank you all so much for being a part of our first market outlook for the new year. I want to remind everyone that the Denver Trading Group webinar this Friday is going to be free to everyone. You can register there. You're not going to pay anything. And I'm not quite sure. I know that it is recorded for the Denver Trading Group, but you have to be a member to watch the recording. But one thing to keep in mind is that if you want to do a 2-week trial to premium, right, only costs $19.95. You'll get 14-day trial. You're going to get a lot of great goodies as part of the room, and you can go to PivotBoss Premium right here, and it'll go to trial offer, and right there you can join the trial. But we're going to do our signature setup series next week, 5 signature setups. And again, so you're going to get the first one Friday, and then we'll knock out the other 5 next week. So if you can't make it Friday, you'll still get that presentation next week or sometime in that boot camp. So a lot coming out in the next several days. It's going to be exciting times for the market here, and it's great to be back in front of folks here for a nice live monthly outlook. So again, I wanted to say, everyone, thank you so much for being a part of today's market outlook. I'll see you all in the trading room tomorrow morning, and I'll see the rest of you Friday for the live webinar. Have a fantastic rest of your day, and I'll see you all soon. Take care, folks.